Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome back. Hope you had a lovely Easter and Pesach. Time now for Traders Corner, and as always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, I'm going to start chatting about a stock in which you have entered a position fairly recently. It's Aspen, and it looks like it's doing exactly what you wanted to do for you.
Yeah, so far looking good. The chart of Aspen is up on the screen at the moment, and we did this trade last week for the show. And basically what we saw at the time was that the stock had pulled back to this long-term uptrend support, which came in at around about 370 Rand thereabouts, and it seems to have held that support nicely. It reversed up off that level. We bought 350 CFDs at 376 Rand with a stop loss at 359 Rand, and we're looking for a move to about 420. Now, as we sit here right now, it's trading at about 390 Rand at the moment. So looking good. All pretty much as I want it to be. So happy to stick long with this trade, and I guess we just sit tight, and hopefully we'll see our profit target being met in the not too distant future. Yeah.
So I mean, you're going to give this a little bit of patience, but I suppose you won't let it drag on, but I guess it feels like it's been longer, because you actually did flag Aspen 2 weeks ago, but you only entered the trade last week. So happy to stick with this.
That's it. Yeah, that's right. We've kind of covered it over 3 weeks, really. But yes, we only entered the trade last week, actually, for the previous week's show, and I'm very happy to stick with it. And just for just a little bit more color on this thing. Remember, the reason why we've seen this big decline in the share price recently was because of the book build where GlaxoSmithKline exited 6% of the company, effectively. And that created a bit of short-term dilution in the market. And I think that is a short-term phenomenon that probably will gradually be unwound in the near term.
Yeah, it does seem to be working its way out. Garth, before we get on to this week's trade, I know you want to have a look at the top 40 and just highlight where we're at the moment.
Yes, I quickly want to have a look at this. Now, this is interesting. It's actually a line graph of the top 40, which is as opposed to the bar graphs that I normally use for this show. I just felt that the line graph in this case illustrates things a little bit more clearly, and tidies the graph up a little bit. Now, what's quite interesting is that we've still got this big overhead resistance on the top 40 index at 47,200. Obviously, that was the high in July of last year, and then we also went up and visited that area in February of this year. So that's become an increasingly significant overhead resistance level. Now, we've pulled back a bit from that area over the last month or so, and the consolidation that we've seen has actually been a relatively healthy consolidation, and it's allowed the stochastics to get a little bit oversold. That consolidation that we're looking at there is it looks to me like a bull flag type of pattern. And typically these are continuation patterns within a trend. What we'd need to see here is for the market to break out above 46,400. That would then validate that flag structure. And that would then probably see us having another go at the high at 47,200. And feasibly, we might then see a break to new highs. But we'll need to see. What's also interesting on that chart is notice the bullish divergence on the stochastic oscillator. That's the squiggly line at the top of the graph. Now you can see that has made a higher low recently, whereas the price made a lower low. So that divergence is telling you that very often when we see positive divergence like that, that is an early warning that you're about to see a move. In this case, a change of trend, which would imply a change of that recent downtrend into a potential uptrend.
Okay, so it sort of supports the case for going long of the markets or long of certain stocks in the markets. And the stock that you're going to focus on this week is Reinet. So let's go through why Reinet and not, for example, British American Tobacco, and I know that's going to come into it, is the way or the stock that you would be choosing to go along of.
Yes, well, quickly, Reinet is an investment holding company, and it was born out of the Richemont stable and whatnot in 2008, believe it or not, so quite a long time ago. Its primary asset is its holding in British American Tobacco. That stake in British American Tobacco makes up more than 70% of the market capitalization of Reinet. So obviously there's a very close correlation between the two share prices. So I'm going to look at them both. This on the screen at the moment is a share price chart of Reinet, and it goes back to 2010, so quite a long-term graph. What's interesting to note is look at that upward trend over there, how neatly that fits. It joins all the low points since 2010, 2011. 11. And you can see that recently the price has pulled back towards that support again, which is at 24 Rand. And we do seem to have noticed some buying interest around this 24 Rand area, and the price seems to be reversing up and moving up off of that uptrend, which is a good sign. Now, if we have a look at the share price chart of British American Tobacco, as you would expect, there's some, quite a lot of similarities really. And you can see again a very nice steady upward trend there. That trend line once again joins all the significant low points on the British American Tobacco graph. And again, recently we've pulled back to the uptrend support, which is at 625 Rand. And we've noticed the share price finding support at that area. It does seem that like the buyers are acknowledging the support on BAT at this level. So if that's the case, if we're going to see the share price of British American Tobacco moving up, the likelihood is that we will also see the share price of Reinet moving up. And I think the fact that we've seen some buying interest in both stocks recently off of those long-term supports is a good thing, and it certainly supports the case for going long.
I suppose the one question is, why not just buy British American Tobacco? Because there are other factors within Reinet, even though they're a much smaller part of the market cap of the company, that could cause a bit of a deviation from what is happening to British American Tobacco.
It's a very good question, and the answer to that is that there's no CFDs listed on British American Tobacco on IG, which is the platform that we trade on. And you might say, well, why? It's a top 40 stock, etc. Because of its inward listed status, there's rules around that. There's no CFDs on the IG platform available on British American Tobacco. So I always use Reinet as a proxy for trading British American Tobacco if I want to do it via a CFD. And as you can see, the two charts are very well correlated, as I've just shown you here.
Yeah, okay, got it. So you have actually entered a trade on Reinet.
I have. What I want to first quickly look at before we get into the details of that trade is just quickly look at this graph. Now, this is a relative graph of Reinet versus British American Tobacco. And the way this graph is calculated is it takes the share price of Reinet and it divides it by the corresponding historical share price values of British American Tobacco.
Okay.
And it plots those two values as one line, as one graph, if you like. And what's interesting to note is that there's a very clear oscillation up and down. You can see the bottom end of that range is at a 0.0385. Remember, this is a share price of Reinet divided by British American Tobacco. And then the top line, or the top of that graph, is 0.0420. So you can see that the share price, or the relative of the two, oscillates up and down between those, or it has done certainly over the last year or so. And where we are at the moment is at the bottom of that range, which implies that on a relative basis, Reinet is actually quite cheap relative to British American Tobacco when you look at the performance of the two share prices against one another. So that also supports the case for why we would like to buy Reinet at this stage. We like the charts of both Reinet and British American Tobacco, but if Reinet is cheap on a relative basis compared to British American Tobacco, then that adds impetus to why we should do this trade.
Which also seems nonsensical because, if that's its biggest holding, is that then well, I hate to use the word obvious trade, but if it's cheap relative to the company that really accounts for most of its market cap, is that the things that one would watch out for as a trader?
Yes, you would. You certainly would with these type of situations. And if you were wanting to do a pairs trade, where you go long of one and short of the other, then what you would want to do here is you'd want to go long of Reinet and short of British American Tobacco, and on this basis, on the basis that you're getting a sort of a relatively cheap entry into BTI via that. And remember, we looked at a similar setup with this recently when we did Zeda and Pioneer Foods.
Well, that's exactly what I was thinking.
Yeah, and that worked out quite successfully for us. And this is the same principle here. You're looking at two companies that have a very close relationship with one another, and yet you do get this oscillation in the two share prices. And that variation on that relative graph actually accounts for around about a 10% variation where you get outperformance and underperformance. And those variations are very much tradable.
Yeah, I mean, 10%, nothing to sneeze at. I know you want to show the graph of Reinet just once again before we look at the whole sort of
let's have a quick look. Now, this is a more recent graph of Reinet, and this is 1 year worth of trading action in Reinet. What's interesting to see here is the uptrend, which comes in at about 24.50, that sort of area of which we alluded to earlier. And what we've done is we've gone long of Reinet now, 24.60 Rand. I've gone and bought earlier this week. The stop loss I'm using is 23 Rand 90.
That's pretty tight.
It's quite tight. It would imply that we'd need to break below that trend line, and would mean that we'd need to break below the lows of all the recent reversal candlestick patterns that we've seen during the past week. So I think if it goes through 23.90, then I'll have to concede that I'm wrong. But if not, and it's looking good so far, then I'm looking for a target of about 26 to 26 Rand 50, that sort of area for this trade.
Okay. And to flesh that out in greater detail, Garth, given the trades that you have open.
Yeah, right. We're going long at 24 Rand 60, as I mentioned. The stop loss, 23 Rand 90. I'm risking, therefore, 70 cents per share. That's the difference between our entry price and where our stop loss would throw us out. Yeah. The risk that I'm taking on this trade is only 1.5% of our total capital value. Now, we've got 307,000 Rand at our disposal at the moment to trade with, so 1.5% of that is basically 4,600 Rand. So in order to calculate our position size, we take that capital risk of 4,600 Rand and we divide it by the risk per share of 70 cents, and that gives me 6,578 shares, so rounding that down slightly to 6,500 CFDs, and that's what I've bought for the portfolio this week. My target is 26 Rand 50, as I mentioned. The risk to reward ratio therefore is 1 to 2.7. So that's decent. It's good enough to validate the trade, I think. And then the exposure, I know a lot of people like to ask about what is the total exposure here. Well, the total exposure is almost 160,000 Rand worth of Reinet shares that we've bought for this particular trade.
Garth, risking 1.5% of the account, is that simply because you've got that open position on Aspen? There was a put option structure that you initiated a couple of weeks ago. Or is this the kind of thing that trade that you wouldn't want to put too much of your capital into?
Yeah, I think one of the things that probably held me back from going a full 2% risk here is the fact that Reinet is trading below its 50-day moving average. And that always is a little bit of a flag for me to say, well, just be careful. The strongest stocks in the market generally do trade ahead of their 50-day moving average. In this case, it's not, so I thought, well, it doesn't say I'm not willing to do the trade. Yeah. I'm still willing to do it, but I'll do it with slightly less aggression in terms of the risk.
And the other thing, I suppose, before we have a look at the portfolio, Reinet, I suppose mentally you think of it as a cheaper entry, don't you, into British American Tobacco, simply because you need less of capital outlay if you're going to trade Reinet rather than British American Tobacco, seeing as it is such a big, expensive share.
Well, yes. I mean, you're talking about British American Tobacco being sort of 630 Rand a share versus Reinet being a 25 Rand share. You know, those type of comparisons to me are pointless, because you just buy more of the Reinet shares to get the equivalent number of British American Tobacco shares. So it's not really a consideration that I'd look at.
Okay. Garth, so what does the portfolio look at the moment then?
Well, it's looking good. We're sitting at our high for the year to date. We're up 22.8%. with 307,000 Rand in the account as things stand. So looking very strong. Those are some of the recent trades that we've done. The Pioneer Foods and Zeta was closed out recently for a profit. We've still got our June option structure working away in the background there for us, giving us downside protection should we need it. Aspen is up 3,760 Rand on a mark-to-market profit there and looking good. And then the Reinet trade we've just put on this week. But as we sit here right now, it's actually up above that entry price level. So looking good, all round looking very good.
And just, I suppose, Reinet, if there's any sort of currency weakness it's going to benefit, obviously, because some of its other investments, it's not just British American Tobacco. There's a British Pension Corporation. There's properties linked to the old US subprime market. So I guess any currency weakness is also likely to flatter that trade, isn't it?
It is definitely a Rand hedge stock. The one, I guess, negative is that it's quite exposed to the euro. And the Rand, believe it or not, has been very strong against the euro. We always think about the Rand-dollar exchange rate and we think the Rand is weak. But if you actually go and look at the Rand-euro exchange rate, you'll see that the Rand has actually been quite strong against the euro. Yeah. So it's interesting to say that. But yes, Reinet's a Rand hedge stock, definitely, but some of that is exposed to euros, which is not always the best kind of Rand hedge to be involved in, not at the moment anyway.
Yeah. Okay, well, I am still long of my Reinet, so I'll see, we'll look with interest as to how this one pans out. Garth, thanks as always for joining us. That is Garth McKenzie, founder and editor of Traders Corner.
Traders Corner is proudly brought to you by IG, the specialists in CFD trading.